Critical Man Pictures presents the Forex video training series. Orange Belt, Introduction to Japanese Candlesticks. We briefly covered candlestick charting in the previous lesson, and now it's time to explore them with more detail. Many years ago, the Japanese created their version of technical analysis to trade rice. Yep, that's right, rice. A Westerner by the name of Steve Nissen discovered the secret technique called Japanese candlesticks, learning it from a fellow Japanese broker. Steve researched, studied, lived, breathed, ate candlesticks, and began to write about it. Slowly, this secret technique grew in popularity in the 1990s. To make a long story short, without Steve Nissen, candlestick charts might have remained a buried secret. The best way to explain is by using a picture. Candlesticks can be used for any time frame, whether it be 1 day, 1 hour, 30 minutes, whatever you want. Candlesticks are used to describe the price action during any given time frame. Candlesticks are formed using the open, high, low, and close of the chosen time frame. If the close is above the open, then a hollow candlestick, usually displayed as white or green, is drawn. If the close is below the open, then a filled candlestick, usually displayed as a black or red, is drawn. The hollow or filled section of the candlestick is called the real body or just body. The thin lines poking above and below the body display the high-low range and are called shadows or wicks. The top of the upper shadow or wick is the high price for that time period. The bottom of the lower shadow or wick is the low price. The size of each candle gives insight to how much buying and selling pressure there is in the market. The longer the candle, the more intense the pressure was during the time it was open. This means that either buyers or sellers were stronger and took control. Short bodies imply very little buying or selling activity. In Forex lingos, bulls mean buyer and bears mean seller. Long white candlesticks show strong buying pressure. The longer the white candlestick, the further the close is above the open. This indicates that prices increased considerably from open to close, and buyers were aggressive. Long black filled shows strong selling pressure. The longer the black or red candlestick, the further the close is below the open. This indicates that prices fell a great deal from the open and that sellers were aggressive. The upper and lower shadows on candlesticks provide important clues about the trading session. Upper shadows signify the session high. Lower shadows signify the session low. Candlesticks with long shadows show that the trading action occurred well past the open and the close. Candlesticks with short shadows indicate most of the trading action was confined near the open and close. If a candlestick has a long upper shadow and short lower shadow, this means the buyers flexed their muscle and bid prices higher, but for one reason or another, sellers came in and drove prices back down to end the session back near its open price. If a candle has a long lower shadow and short upper shadow, this means that sellers flexed their muscle and forced prices lower, but for one reason or another, buyers came in and drove the prices back up to end the session back near its open price. Just to get you started with a few basic candlestick patterns. A spinning top pattern is defined by candlesticks with long upper and long lower shadows and a small body. The color of the body is not important. This pattern indicates indecision between buyers and sellers. The real body, whether red or green, shows little movement from open to close, and the shadows indicate that both buyers and sellers were fighting, but nobody could gain the upper hand. Even though the session opened and closed with little changes to price, price moves significantly higher and lower in the meantime. Neither buyers nor sellers could gain the upper hand, and the result was a standoff. If a spinning top forms during an uptrend, this usually means there aren't enough buyers left, and a possible reversal could occur. If a spinning top forms during a downtrend, this means that there aren't many sellers left, and a possible reversal could occur. Doji candlesticks have the same open and close price, or at least very close, and their bodies are extremely short. A doji should have a very small body that appears almost as a thin line. Doji candles suggest indecision or a struggle for turf position between buyers and sellers. Prices move above and below the open price during the session, but close at or very near the open price. Neither buyers nor sellers were able to gain control, and the result was essentially a draw. When a doji forms on your chart, pay special attention to the preceding candlesticks. If a doji forms after a series of candlesticks with long white or green bodies, the doji signals that buyers are becoming exhausted and weakening. In order for price to continue rising, more buyers are needed, but there aren't any more. Sellers are licking their chops and are looking to come back in and drive the price back down. If a doji forms after a series of candlesticks with long black or red bodies indicating a downtrend, the doji signals that sellers are becoming exhausted and weak. In order for price to continue falling, more sellers are needed, but the sellers are tapped out. Buyers are foaming at the mouth for a chance to get in cheap. A Maribozu is not some sort of voodoo magic designed to make you buy a sham wow, but it is important in the world of candlesticks. A green or white Maribozu contains a long green or white up candle with a long body and no shadows. The open price equals the low price, and the close price equals the high price. This is a very bullish candle and shows buyers were in control the entire session. It usually becomes the first part of a bullish continuation or a bullish reversal pattern. A red or black Maribozu contains a long red or black down candle with a long body and no shadows. The open price equals the high price, and the close price equals the low. This is a very bearish candle and shows sellers controlled the price action during the entire session. It usually implies bearish continuation or bearish reversal. In the next lesson, you'll be shown specific candlestick formations and what they are telling us. You'll begin to analyze Japanese candlestick formations and understand price action and be able to predict future price action or direction of the market. Hopefully, by the end of the lessons on candlesticks, you will be able to recognize candlestick patterns and make sound trading decisions based on them.